Hi all, happy afternoon and welcome to this wonderful session. I'm Sidhu from Guru and Jana Chartered Accountants, and today we will be having a wonderful session. This is more on the tax return you file, the income tax compliances, and the host of the other things which the individual taxpayers are expected to do. And I have with me my colleague, my friend Sridhar, who is be participating with me in this entire flow of 45 minutes. Sridhar, you can just smile and say hi to the viewers. So some of the viewers are there at home, some of the viewers are at office, and some of them are planning for their weekend. So let them have a good time for this.
Hello everyone, a very happy afternoon, and I wish you a very happy Varmahalakshmi Habba. So today we are here to discuss on what is income tax compliances and what are the things to be made known to file a tax returns. So I know, Sidhu, today's topic is actually quite special for all of us. The income tax is actually a very vast subject. So what are we covering today?
Correct, Sridhar. If you see that, if we see the on screen also, the way we have captured the entire the session is the income tax is a broader subject as such, and income tax compliance is a part of it. It is a small speck of income tax, and tax returns filing is further smaller speck of this. And so we are trying to convey through this medium that what are all the tax compliance you are supposed to do, and what is there in the tax returns, and what are the due dates for filing the tax returns, and what happens in case if you do not file the tax returns within the time limit provided in the law, and in case if you have missed to report anything, how do you revise it, and in case if such revision is not possible, then what are all the remedy which is available in the law.
Right.
Okay, and by the way, we're looking very bright today with this shirt and all.
Thank you, Sidhu.
So let us continue with the session.
Yes. So the coming slide actually it talks about income tax. So, but Sidhu, I pay GST when I buy groceries. When I buy a stationery, I pay GST. When I get my car service, I pay GST on it. When I go out with family for a movie or a dinner,
Absolutely.
I pay GST. So why do I should also pay income tax as well?
So you are trying to tell that you are paying GST, and why should I pay income tax at all?
Absolutely right.
See, there has been a legacy of collecting and living and collecting the taxes in India, and the taxes are prevalent since a long time. The taxes are prevailing since before independence also. So there is a certain way or certain mode in which the taxes are collected. There is something called as direct tax. There is something called as indirect tax. Direct tax is something which you pay directly to the department. I mean, directly to the central treasury. Income tax is a best example of one of the form of the direct tax. Indirect tax is something you pay to the other party. He will collect it from you and remit to the department. And the best example for that is GST. So these are the different levies, and Article 272 of the Indian Constitution empowers the Parliament of India to collect and levy and collect the taxes on income. So you cannot question the constitutional validity of the income tax levy. So GST is the one form of tax what you pay, and income tax is the other form of tax you pay. Sridhar, you don't have the choice. Actually, you have to pay income tax because that is a central levy, and even the government have their own expenses and all those things for. We will see it later on what kind of expenses which the government will be having.
So you mean to say actually the article has given a power to the government to collect taxes? Is it a form of lagan which was being collected in older days?
Similar to that. It is not actually lagan because lagan was even levied on agricultural income, but fortunately it is not there now.
Okay.
But it is a kind of tax which is similar to the earlier things what were prevalent in India.
Okay. Fine, Sidhu. So in that case, what is the next I should do? So in case I earn income, what is that I need to do? How do I need to intimate department about the income I earn, or how do I report it? So do I need to?
So now there is something called as the tax returns filing. Every year you have to file the tax returns. The due dates are provided in the law, and within that due date you have to declare your income earned. So Essentially, income tax return is nothing but a declaration of income earned during the particular financial year. For example, during the financial year 18-19, you may be having an income from different sources. You may be having income from salary, you may be having income from your house property, rental income and all. You may be engaged in some kind of a business or profession. That income is also there. You might have sold certain shares or mutual funds, or you might have sold a immovable property. That income or gains is there. And you may be having other sources income like interest, dividend and all those things. So at the end of the year, you have to compute, this is my tax, this is the income what I earned, this is a corresponding tax liability, and this is how I discharge the tax. That is essentially nothing but the tax returns. Tax return is nothing but declaring the income earned by you along with the taxes to the department, because considering the nature and size of a country, it is not possible for the government to go each and every household and ask whether you have filed the tax return, what is your income. So there is something called as a self declaration and self payment of taxes in the income tax law. So this is nothing but declaring the income, that is predominantly called as income tax returns.
So in that case, you say it's a declaration and it's not any certification. So I need not go to a chartered accountant for
need not be necessary. Chartered accountant, in case if you feel that you have done some complex transactions and you don't know how to claim the deductions or how to claim the exemptions which are allowed in the law. In that case, you can, if you feel that external advice is required for me and external some kind of expert consultation is required for me, then you can go to the chartered accountant. Otherwise, the filing of a tax return is much simpler now. We will discuss over a period of time.
I think maybe simpler, but it's not simple for all of us.
It's not simple. Actually, what you said is absolutely right. It may appear simple, but as you go further, it appears that there is a whole lot of complexities while filing the income tax returns also.
Okay, so we'll address it one by one, I think, in those in this presentation. Today's presentation. So fine, Sidhu. So in case I want to understand what are the key contents of an ITR, so how do I actually see what are the contents of an ITR?
So now, as you can see on the screen, the income tax returns as such, it overall broadly it consists of three important things. One is your tax portion, I mean your income portion, what are all the income you have earned during that year, and in case if you have claimed any deduction, those deduction part of the will be there in the income tax returns, and the tax credits. Tax credits in the sense the taxes paid to the central treasury. It may be in the form of TDS, or it may be in the form of advance tax, or it may be in the form of self-assessment tax which you pay at the end of the year. So this is how your broadly, in case if you see the broader picture of your income tax returns looks the way it is presented here.
So three things which I think the viewers should be making notice. There is income, and there are deductions and
exemptions, and the taxes paid. Taxes paid.
So this taxes paid also include the taxes paid outside India also, Sidhu?
Obviously, in case if you have the income, it again depends upon the residential status. It may so happen that the income of the person is a resident in India, and he has income outside of India. In case if he has some income from the sources outside the other country, if he has a income from US or maybe other country for that matter, and he may end up paying the taxes in the source country as well, and he may end up paying the taxes in the home country. In that case, the taxes whatever you have paid outside the country, you can claim it here in the form of tax credits. There is a unilateral thing and bilateral thing, and all those things are there. So you don't end up paying the taxes in that country and this country also. You will definitely get the credit for the taxes whatever paid outside India.
So that means basically it's double non-taxation is avoided.
Double non-taxation is there in place, because India has the double tax DTAA, that is double tax avoidance agreement with more than 100 countries. So you need not worry about that. In case if you do have any other income outside of India, so that you're worrying that I'm paying the taxes there also.
No, I don't have it. My friend is having a bank account.
He need not worry, no problem. If he is paying the taxes there, he can very well take the tax credit here. Then there is a separate portion in the income tax returns wherein you can go and key in that number.
Okay. So in case any of our viewers actually has got any of the questions in between, or they have any questions to ask to us, I think they can send it to us. And they can leave that email ID also. We can actually reply to them on a one-on-one basis.
They can start asking the questions, and in case if the time permits, we will clarify all those questions here itself. In case if due to the paucity of our time, in case if you are not able to clarify those those queries, they can leave their email ID. We will get back to them in the due course.
Got it, Sidhu. So in terms of the income tax return, so I have various sources of income. I have a friend actually who earns salary, who has got a property, he gets rental income.
Possible.
Daily, on a day-in-day-out basis, he starts doing trading on the shares. So as he has got more of actually casual income, so he has also had some incomes from other sources. He also has income from dividends or also has got FDs with various bank accounts.
Possibly the person.
So what are how do I actually, in income tax, how do I do it? So in income tax, how do I classify?
In the income tax law, you may, as I told you, an individual may be having a different income from different sources. So you need not have to think about more of the sources and all these things. The only thing is, for the purpose of simplicity, the law has categorized under section 14 of the income tax law. If you see, there are 5 heads of income.
Okay.
Only 5 heads of income are there, and so all your income should fall in any of these buckets.
So that means I'm assured that only 5 heads. There is no
5 heads are there. No, you don't go beyond these heads of income. And in case if you have any income from any sources, that has to be essentially fall in any of these sources. Okay. And first is salary. Salary understood. There is an employer and employee relationship.
Okay.
And the income earned by way of a salary is taxed to that. That's under charged to tax under the head income from salary. And it is possible that you may be having a residential property or commercial property. The income earned from therein, it is charged to tax under the head house property income. During the year, you may have some certain capital asset. Capital asset in the sense you may have immovable property, maybe land or building, or you may have jewelry, or you may have shares and all these things. You sell those properties, and there is some amount of profit or gain element in there involved in that transaction. So that is charged to tax under the head capital gains. And you may be engaged in certain business or profession that is charged to tax under the head profits and gains from business or profession, what we call as PGBP. And in addition to that, whatever income you have other than salary, house property, capital gains and PGBP, that is profit, business or professional income, whatever other income you have, that is consolidated and it can be declared in one last residual category of a source. There is something called as IFOS, income from other sources. Say for example, you have interest is not falling in any of the categories, so you can declare it under income from other sources. You may have a dividend, and that may be declared under other sources. So you may, in case if you feel that I have certain income which is not falling in any of these categories, I don't have to pay tax at all on that. It's nothing. In case if your income is not falling in any of those categories, it goes and fall in the residual category, that is income from other sources.
Okay.
So these are the 5 heads of income.
Okay. So in terms of, I think the viewers are actually having some questions to ask here. I think the questions can be answered at the end of the session, or probably you can send us through email with your email ID.
We will certainly go through the questions at the end of the session, because in between it becomes difficult for us also to take up all these questions. Yes. So we will move ahead with our session. So at the end of the session, obviously the questions we can take it up.
Sure. I think viewers can make a note of it. Any questions you have, you can actually post it, and we'll answer to that on one-on-one basis. So Sidhu, I think I'm aware of salary income, capital gains, PGBP. IFOS is something which is residuary, as you said. So it is something like, if it doesn't fall in any of the categories, it goes and fall under income from other sources. So there are certain key or critical points which are there in house property income. So say for example, in case I let out property to Airbnb on a not really on a regular basis, I say intermittently. So probably for a short term, I let out my property.
So Airbnb, HomeAway, and all these things you are telling.
So how do I actually tax it? Shall I tax it as an income from house property, or shall I tax it as income? This has been a
subject matter of litigation, and a lot of disputes are there in that. And the taxpayers interpret the law the way which is beneficial to us, and the tax authorities interpret the law the way it is more beneficial for them. So there is the litigation part is involved in this, because what happens in this case, Airbnb and HomeAway and all those things, the property is letted out only for the particular portion of the year, particular part of the year. For example, in case if you have gone, this household has gone from some vacation for 2 to 3 months. During that year, there is an arrangement between the landlord and the tenant, and the property is let out only for a certain period of time. So in this case, whether it is a house property income or it is a business income is a matter of fact. And the law is not very clear on this, because these are the new arrangements which are coming into the business model now. So there is a lot of dispute in it. So my personal opinion, if you see, as there is a separate head for house property income, it has to go and fit it in that income. But again, it depends upon the periodicity and the period quantum of the amount of the period involved and all these things.
Okay.
It may be categorized as a business
So that
income
means
also.
actually you say that the facts could be different in different scenarios.
Obviously, in case for you it may be rental income, for me the same means other scenario it may become a business income. So now why we are discussing all these things? What difference does it make for the taxpayer whether it is taxed in house property income or if it is taxed in the business income?
The bigger aspect is the deduction which I get.
Absolutely.
In case business or profession, I get a higher deduction.
Correct.
In case of a
House property, it is restricted only to that 30% as per the section 24.
So probably you can get extra deduction on the municipal taxes.
Absolutely.
So there is nothing else actually you get deduction apart from these two aspects.
And in some of the cases, if the owner of the property is a company or a firm, and they have a whole lot of properties and
Probably
they are
real estate
maybe
companies.
real estate companies, or other than real estate companies, there are so many partnership firms. They own a whole lot of properties in various geographical locations, and their entire business is letting out.
That's
So
right.
then they can tell that my business itself is letting out. Why should I declare this income in the house property? So there was a lot of litigation on this aspect.
So that means-
And recently there was a Supreme Court judgment in case of Chennai Properties and Investment, wherein Supreme Court also categorically they mentioned that in case if you are engaged wholly and exclusively in the business of letting out of the property, and in case if it is mentioned, this fact is mentioned in the partnership deed, or in case if this fact is mentioned in your memorandum of association, then you can declare it as a business income.
So for an individual, I think this may not be a very big factor. So depending
May
on the
not be.
facts of the
For
case.
in case of individuals, I think in most of the cases it will be charged to tax under
Perfect.
property.
In that case, in case they have still any doubts, I think they can reach out to the chartered accountant, or they can reach out
In
to
case if they have a complex arrangement, in case if they have registered as a company or they have a partnership firm, or in case if there is some irregularity between the portion of the year they let out and portion of the year the property is left vacant for different reasons. So in case if they have certain complexities, it is better to go for an external consultation.
So probably a chartered accountant can help you actually to identify what is the nature of income in case there is a difference in view of classifying it as either from income from house property or income from business or profession.
Correct.
So I think gave a clarity to it. So I think let us see what is there actually for the next slides now, because we are already short. We have completed 15 minutes and there are a lot more to cover actually. So there are other aspects actually which as an individual which I have seen. So I actually transfer some money to my wife's account.
Understood. Because you are in the 30% slab, now you are planning to move because in case if you earn interest, you have to pay 30% tax on that. So you are planning to move some of your funds to your spouse or maybe your sister, brother, and all those things, so that they can earn income. Maybe your wife, Bhabiji, she is a housewife. So she don't have any other sources of income, and she falls in basic exemption limit. So these kind of arrangements have been made, tried and tested earlier also.
Okay.
The income tax law, there is a specific provision contained under section 64, and this is something called as clubbing of income. In case if you transfer any asset without any monetary, the love and affection may be a consideration for your personal purposes, not for tax purposes. So out of your love and affection, in case if you are transferring the FDs and she is earning the income from those FDs, even that interest is clubbed in your hands.
Oh, so I should be very careful. So
Yes.
before I file income tax, I should also look at the interest income earned by her.
Yes,
So I should be
obviously.
very careful on that. Oh, thanks, Sidhu. So I think this is one of the important aspects which viewers should make out, that in case they have earned income and given that money to any of the relatives, or probably given to spouse.
So then you have
they
to
are
check
making it to spend.
whether it
So
has to
that
be taxed.
income will also be clubbed in the hands of the assessee who has actually transferred the money.
Correct.
Because the source is actually the husband. So
Yes,
in this case.
Yes. And now the next, the important thing what we have is most of our viewers, most of our individual taxpayers, they may be having investment in mutual funds. So there are 2,500 different mutual fund schemes, debt oriented, equity oriented, and all this thing. And even for tax purposes also, there is a separate tax statement for equity oriented mutual funds and separate tax statement for debt oriented mutual funds. And in case if you want to identify whether it is a debt oriented or equity oriented, then you need to see whether the mutual fund investment, whether the mutual fund scheme has invested 65% of more of the funds in the equity shares, then it will be considered as an
So how do you
equity oriented. You can identify. There are a whole lot of these sites are there. You can go to moneycontrol.com. There you can just type your the name of your scheme, and entire thing will appear there, whether it is equity or whether it is debt, what portion of it is invested in equity, and this is freely available on the internet. It is not difficult for you to identify.
So I think as a viewer, actually, in case you have invested in a mutual fund and there is any capital gains on it, to identify whether it's a debt-oriented mutual fund or equity-oriented mutual fund, because there is different taxation for debt-oriented and equity-oriented. To identify what kind of fund it is, so you can visit to moneycontrol.com or any other website which is publicly.
So many websites are there. You can just type in the Google whether it is debt-oriented. Hundreds of sites will appear,
Right.
and
So
all
you
those
can
things
take
are
a note.
authenticated.
So this is actually a very important point to make a note of it. So next is in terms of I have sold a property or I have purchased a property. Yes, I have sold a property. And
Be specific in your question. Don't don't get confused first. Otherwise, the entire gamut of the income tax levy will change.
Okay, so I have sold a property, Siddha. I have sold a property and the stamp duty value is more than my sale
It
consideration.
cannot be. It
Why
can
so?
no. In case if
It
you
can be because in a city like Bangalore,
it may be for different reasons. For the tax purposes, it need not be, because
Why?
there are separate provisions in the income tax law under section 50C, which tells that in case if your property, the guidance value or the stamp duty value of the property is more than the sale consideration, the stamp duty value will be taken as a consideration for the purpose of capital gains tax. For example, in case if you have sold the property for say rupees 50 lakhs and the stamp duty value is 55 lakhs, for tax purposes, 55 lakhs will be taken as a sale consideration, less cost of acquisition, and balance amount you have to pay tax.
so this is actually a check.
This is a legal fiction which is created in the law.
a legal fiction to ensure that actually you don't undervalue property.
Undervalue the
right?
property and some unaccounted money, flow of unaccounted money, all those things will be there, because in order to avoid these scenarios, there has been a specific amendment in the income tax law. Your stamp duty valuation should not be less than the
So this is a mechanism
consideration.
to curb actually black
curb the
money.
circulation of black money, generation and circulation of black
I
money.
think this is an important point to know. In case actually in case your property, you have sold a property and the valuation is actually lesser than the stamp duty value, then you have to be bit concerned here.
Yes, and
So they have to
in that
either
case they have
approach
to-
the chartered accountant to check as to
correct.
what he has to do.
Before the registration of the
Before the
property,
registration, before they actually enter into transaction, they should ensure
yes,
that they
before
communicate.
the agreement happens.
Absolutely. I think this is a very important point to be made note by the viewers.
Yes.
So let us see what is that actually we need to see. There are one question which has been asked by one of the participants or one of the viewers. So how to mention the profits and loss from the sale of shares in ITR? So when do I mention it, Siddhu? Or how do
There
I
is a
mention it?
specific schedule for this, Sridhar. There is a specific schedule. Again, it depends upon what kind of shares we are discussing here. In case if in some of the cases, it may happen that the sale transaction may be treated as a business income.
Okay.
In some of the cases, it may be treated as a capital gains.
Why it should be treated as business?
It depends upon, in case if you are doing intraday trading, day in day out, you are logging into the your demat portal and selling the shares and purchasing the shares, that is nothing but your business. That is a business you are doing. In case if you are investing in some shares and holding it for a longer period of time,
Okay.
so that will be a capital gains. Now here the difference is till 31st of March 2018, even now also, till 31st of March 2018, the long-term capital gains on the sale of shares or mutual funds, sale of equity-oriented mutual funds was exempt from tax under
Okay.
Section 10, subsection 38 of that. So people used to say that, okay, this is my capital gains income and I'm exempt to pay the tax on that. But
Right.
department used to say that, no, this is business income, sale consideration minus purchase cost, you have to pay tax on that.
Oh,
So this
okay.
was the dispute that is there. Now also it depends upon the kind of your facts of the case and the way in which you are holding the securities and the way in which you are transacting in the market. But we will discuss, we have one more slide on this, I think, and there is a CBDT Circular 6/2016, where has been the Central Board of Direct Taxes has clearly issued directions or guidelines to the income tax authorities, telling that in case if you are holding the shares or a mutual funds for a period of more than 12 months,
Okay.
so and you decide to treat it as a capital gains income, income tax authorities cannot or need not dispute on that matter.
Perfect. So in that case, it depends on the intent of the person who's-
Intention, objective of
Suppose I'm
holding the shares.
Suppose I'm holding a share actually for the purpose of trading it on a
Correct.
day in and day out basis. So I classify it as an income from business and profession. So in case I hold it for a
Longer period of time as an investment.
As an investment, so then it falls under capital gains, right?
Correct.
So whatever capital gains I have to, I'll be accruing it. So on that I should discharge the tax liability as applicable for the capital gains.
Yes.
How do you actually differentiate this? Because the tax rates for business and profession is higher.
Higher, and there are specific exemptions which are allowed on
Under
the
law.
capital gains.
Perfect. So in that case, actually, so viewers should also make a note telling that intent becomes a very important factor to identify or to classify the profits and gains which are earned from sale of share or property trading in shares.
Sure.
So that is a deciding factor for us to take it forward. So Sidhu, I think we have discussed on broadly on the heads of income and other aspects of it. So what is the tax rates which our assessee should pay? So how do I actually, where do I get the tax rates? Or what is
Tax
the
rates, every year it will be there in the Finance Act, annual budget followed by the Finance Act. Tax rates are defined in that. Currently, everyone would be knowing this. For individual taxpayers, up to 2.5 lakh. For generally up to 2.5 lakh, it is exempt, and
That's right.
then the 5% tax from 2.5 to 5, and 5 to 10 there is 20%, and above 10 lakhs 30% of tax. And in case if there is a senior citizen who is above 60 years of age like me, so for him 3 lakhs is the basic exemption limit, and there is a super senior citizen who is more than 80 years of age like you, for him the basic exemption limit is 5 lakhs.
Obviously, I think we are not Sidhu, I think we fall to the first category.
First category.
So-
Gradually we will move to those categories also.
Absolutely. I think so. The viewers should make note that actually, in terms the age is one of the factors which is actually help you to decide what is the tax rate applicable for the financial year 18-19. So, in case an individual less than 60 years old, they get a higher tax bracket, and in case a senior citizen, they get actually a little bit relaxed tax structure.
Yes. And this is, we are discussing only on the tax rates here.
Right.
In addition to that, there will be some amount of surcharge and education cess depending upon the your taxable income.
Okay, so I should also pay on top of it a surcharge and secondary and higher education cess.
Yes,
Probably
yes.
health cess is what
Yes,
is
health
important, right? So I think now it's clear in terms of an individual taxation. So in case of corporates and other things, I think there is in the Finance Act there is also rates which is prescribed, so they can.
So we are focusing mainly on the individual
Individual
taxation. So
taxation.
those things we are not discussing here.
Okay.
So now, obviously, when you have your income and sources and all these things, you want to declare it. Now, how do you declare, and what is the time limit for declaring your time limit for filing a tax
That
return?
is important.
So for individuals, obviously, 31st July following the financial year is the time within which the tax return has to be filed. For
Okay.
example, for the financial year 18-19, 31st July 2019 is the due date within which. However, for this year, for the financial year 18-19 alone, the due date has been extended to 31st of August.
Okay, so
It may not necessary that next year also the 31st August is the due date. In the law, if you see the provisions of section 1 of section 139, it is clearly mentioned that the due date for those cases, individuals and other cases who are not liable for any audit, 31st of July is the due date. And in case if you are supposed to get your books of accounts audited under any law, maybe under income tax law or under the company law or under
Okay.
partnership law or under LLP law, for them the due date of filing the tax return will be 30th September.
okay,
And in case if you have any transaction with your international associated enterprise, international, for example, there are certain companies who are subsidiaries of foreign companies. There are Indian companies who have the subsidiaries outside India and they have a transaction in between. For them, the due date of filing will be 30th November 2019.
perfect. So I think in terms of the due dates, that the viewer can make a note that 31st July 2019 was the due date.
For this
filing.
year, it has been extended to 31st of August.
So there is an extension which has been given by Income Tax Department. Probably because of various reasons they have given an extension. So we'll come to that point as to what was the reason why extension was given, and then see.
And now the interesting thing is what happens if you don't file the tax returns within the period of
that
time.
is an important question, Siddhu, because there are so many friends who calls up and say that I missed to file the income tax last year. So what should I do?
No,
So is there
we
any
will discuss.
penalty?
We have one more interesting slide on that. Penalty is also there and interest is also there under 234A. We will
Okay.
discuss it on the other side of the session. Now let us see what is this interest. What will happen if you file the belated return? That we will hold it for certain time and it will be discussed in the later part of the session. So let us see what here. This is the slide which I was discussing.
Okay.
In case if you fail to file the tax returns within the period of time, for example, 31st for the financial year 18-19 before 31st of August 2019, you have to file the return. For any reasons, if you are not able to file it, you can file the belated return. Belated return is the returns filed after the due date of
So
time.
what is the timeline I can?
Time limit is by 1 year from the end of the financial year.
Okay, so what is the end of the financial year?
In case if 2019 31st March 19 is the the date, end of the financial year, within 1 year means by 31st of March 2020, you can file the belated return.
So that means actually the last day for me to file income tax return is 31st March 2020, but that has got penalties. That has got an interest
That
levy.
we'll discuss. This
Right.
will not come for
So in
free.
that case, it is actually they have to file the tax returns before the due date.
Before the due
For
date.
this financial year, it's better you file before 31st.
Before 31st of August.
2019.
Correct. In
Right.
case if you are not going to file, these are the consequences of filing the belated return.
Okay.
So there will be a penalty under section 234, penalty in the sense fine under 234F of the Income Tax Law, Income Tax Act. In case if you are filing your tax return before 31st of December 2019, 5,000 rupees penalty you have to pay. In case if you further delay it beyond 31st of December 2019, 10,000 is the fine which you are supposed to pay.
So in case actually an assessee fails to file, he has to pay 5,000 penalty even if his income is less than 5 lakhs.
In case if it is less than 5 lakh, that penalty is restricted to 1,000 rupees.
Okay, so I think that is an important point to note because the small assessee.
It is not an important point. You need not tell that, okay, 1,000, only 1,000, I may delay it for filing the return because there are other consequences also.
Okay.
So I will tell you, in case if you have sold the property, in case if you have sold any shares or mutual funds, and because of some reason the stock market was not doing good during the calendar year 2018, part of 2019, and there is some amount of losses on.
Oh.
So that loss you can carry forward and set it off against the subsequent years' income. So in case if you file your belated returns, you are not allowed to carry forward that loss. You will lose that.
So in that case, it's not only penalty, I'm also going to lose the loss.
Lose the loss.
So loss is also a
Losses
loss.
only in case if under house property income, under house property you have any loss, that loss can be carried forward. But other than house property, you have business loss and you have this loss from the sale of shares or immovable property, that will not
This
be
is an
allowed to be carried forward.
important point. A viewer should make a note telling that don't delay your income tax return filing because it's not only that additional filing fees or penalty you pay, you also actually will not be entitled to carry forward the losses.
Correct. And in addition to that, in case if you have any additional liability, tax liability, which you have to pay it before filing the tax return, on that there will be interest of 1% per month
Oh, okay.
under 234A.
So in case there is any
There is an interest,
tax liability,
there is a penalty, and there is a consequence of not carrying forward
it
your.
becomes very, very important point actually to make a note
Yes,
that I should file my income tax on time. I should not be delaying it.
correct.
If I delay it, I'll be liable for so many other penal consequences,
Yes.
as well as actually I'm going to lose out the carry forwarding the losses.
Yes. Now, if you see,
So how to identify the ITRs? So there are so many ITRs which I've been hearing.
yes.
So
But
how do you
different
identify
class,
which ITR you should file?
different class of assets, different kinds of types
how
of
many types of ITRs are there?
ITR 1, 2, 3, 3.5, 3.5 is not there. 4, 5, 6, 7, all these things are there.
Okay.
Let us, in a broader sense, let us see. These are
seven ITRs are there.
7 ITRs are there.
Okay.
So ITR 1 is for this ITR is applicable. ITR means income tax returns.
You should pay attention to this point
On this
because this is an important aspect to note. Which ITR you should file. It's
should-
better you make a note of it first
Correct.
and then
Yes.
accordingly decide filing it. Because once you start filing it, I think you may get stuck in between.
Correct. So in case if the individuals whose income is less than 50 lakhs and he who does not have the income from capital gains and business income, ITR 1, that is something called as SAHAJ. SAHAJ means simple.
So it's simple. Okay.
Simple.
So is
For
it I need to file in online utilities?
Online utilities there, you can log in directly, you can log into the income website and there you can fill it. This is when most of the fields are pre-filled.
So in that case, I get a utility online in income tax website, and also I can log into income tax website portal and then fill this ITR Sahaj,
Correct.
right? So there is also a pre-filled options. So whatever actually data which is there in your income tax PAN records, that will be taken into account.
Pre-populated.
So the into marks actually indicates I should not have those incomes.
Those incomes. In case if you don't have that, for example, in case of ITR 2, this is applicable for individuals whose and HUF whose income is more than rupees 50 lakhs,
50 lakhs.
and they should not have business income.
Okay. Got it. So
Next.
and they should have more than one house property.
One house property.
In case
In
one
case-
house property is there, ITR 1 would have
ITR 1 would be.
sufficient.
So ITR 3 is for the individuals and HUF who has income from all the sources,
Okay.
including business income.
Okay. So that means all 5 heads are covered here.
Yes.
So the 5
In
heads
case
which
if
we
you-
discussed in the today's
First slide, if you
session-
have, it is possible that for you all heads are there.
No, sir. Actually, it's not. So it's
So
not.
there is one more, the ITR 4, this was something called as SUGAM. For certain class of assessees, for business or
What
professionals,
is? Okay.
there is something called as presumptive taxation in the law.
Okay.
They can declare this income and tax rate is they can pay the taxes on presumptive basis. For them, there is something called as ITR 4 Sugam. They can opt for this ITR.
So in case of ITR 4 Sugam, in terms of the presumptive taxation, so what is actually presumptive taxation, Sidhu? I don't know.
In case if you are engaged in any business and in case if your turnover is less than 2 crores, so instead of maintaining a books of accounts and filing your regular taxes, 8% or 6% of your turnover will be deemed to be the income. On that you have to pay tax.
Okay. So that means actually wherever there is a presumptive basis of taxation being opted by the SSC, where they either for professional also in terms of doctors, advocates, and chartered accountants as well. So they have presumptive taxation which they can opt for.
Correct.
So in terms of ITR, I have gone through. But do I need to disclose my assets and liabilities?
Assets and liabilities, you have to disclose it in your income tax returns only in case if your income is taxable income is more than 50 lakh rupees. And there are certain things which are prescribed, and those things are in the details of your immovable property, land, building, jewelry. In case if you have archaeological collection, painting, sculptures, painting of M.F. Hussain and all those things, vehicles, hatches. In case if you have any hatch in Dubai, Abu Dhabi, and all those things, financial assets, bank deposits, it may be savings bank account, it may be FDs, shares, mutual funds, insurance policy, premium paid till the date. In case if your given the loan any of your friend or relative, or for that matter to any buddy, those loans and advances has to be captured in the income tax returns, and your cash balance as on 31st of March 2019 if you are filing the tax returns for 18-19, and liabilities in relation to those assets.
Okay, so that means actually the moment my income is more than 50 lakhs,
you have to
disclose all this.
You have to disclose mandatorily. It has to be there in the income tax returns.
Okay, so viewers should make a note in case your income is more than 50 lakhs. It should be mandatory for them to report their details of the assets, what they own.
Correct.
And then report it here.
And there is something called as disclosure of foreign assets. In case if you have any assets outside India, irrespective of your income, your income may be more than 50, less than 50, whatever.
So foreign assets means what?
Foreign asset means it may be a immovable property, it may be a bank account there, it may be savings bank account, it may be Swiss bank account. In case if you have any Swiss bank account, you have to declare it in your income tax return irrespective of your income.
Oh, okay.
So all these things has to be reported. There is a separate schedule in the income tax returns for this. There is something called as schedule for an asset.
Okay.
There you have to go and.
So is there any threshold being applicable?
Nothing, no threshold for this.
So that means actually even my income is less than 50 lakh, I
have
should
to declare
continue to report.
You have to declare.
I should continue to report all my foreign assets.
Yes.
Okay. So that's an important point. I think viewers should note in case SSC, anyone who.
Even if you have a bank, some small amount of $50 or $100 lying in that bank account, it has to be declared in your tax returns.
Okay. So what if I fail to disclose it?
That will be again misreporting of income.
Okay, so there is also
the return itself may be considered as invalid return.
Okay. So there are a lot of things which actually viewers should make a note telling that if I have a foreign asset, I should ensure that that is disclosure for them.
Yes. And if you see, there has been a dramatic changes in the income tax returns in the recent past, mostly
right, so that
5 years.
That is one of the major reasons I think why the extension was also given.
Yes, yes. For this year, because they were asking, they have asked for various different
additional
disclosures, and because of that reason, the due date was extended. So these are the some things which have tabulated. Obviously, you have to mandatorily file your tax returns online.
That's right.
And ITR 1 is applicable for individual taxpayers. And in case if you have any shares in unlisted company, private limited company or closely held company, you have to give the details of the shares held in that company in the IT returns.
So that means all unlisted shares held by me, I should disclose it.
You should disclose
so what
it clearly.
Disclosure you should do in unlisted shares?
The number of shares held, cost of acquisition, and opening balance of those shares, transaction which has happened during the financial year 18-19, and the closing balance of those shares along with the cost of acquisition.
So that means to say I should disclose all unlisted shares, what is my opening stock, what are the
additions or deletion during the year,
transfers done, and the closing balance along with the cost.
Yes.
So this department want to track actually all the unlisted
shares from where you are purchasing and from where you are holding all these shares and all things. Right. And another important thing is, in case if you are a director in any company, you have to give your PAN of the company in which you are a director, as well as your director identification number. It has to be there in the tax return.
So it means actually if a director is actually filing his income tax return, so you should ensure that he fills all the company names where he is holding a directorship.
Correct.
Along with the company details and PAN of the company as well.
PAN of the company as well.
Okay, so this means actually the director should compile a whole lot of information.
Yes, yes. In case if you are a director in more than one company, So we have to list out all the companies in which you are the director, and
then accordingly
we have to make the disclosures.
Those actually viewers who are a director of the companies, it's better to make a note. And in that, whatever the companies you're a director, you have to ensure that you fill in those details.
Correct.
And in case they are even the foreign company directors, they should also report.
They should also, but in that case, PAN would not be there.
Okay.
But you have to declare the name of the company and all. In case if ITR2, for example, for a non-resident, the number of days he has stayed in India during the financial year 18-19 and 4 years preceding that financial year, you have to report it. And in case they have a tax identification number in foreign country, even that has to be reported. Okay. And there is a separate column for 80 TTB for senior citizens to the extent of 50,000 rupees interest earned is exempt under the law. The deduction is there under 80 TTB, that has to be mentioned separately.
So I think senior citizens should make a note telling that they all have a separate deduction being allowed. For a normal individual, actually for an individual who is not a senior citizen, for them actually 10,000 is the deduction which is being allowed from the savings band interest. But for a senior citizen, not only the savings band interest, but also the interest earned by them from the fixed deposit done, they'll get deduction up to 50,000.
Correct. And in case if you have claimed, if you have any income which is exempt from tax, and if you have claimed any expenditure in relation to that income, that has to be disallowed under section 14A, that disallowance has to be there. And in case if you are the resident of any other state, if you are filing the tax returns in that country, you will have a tax identification number that has to be reported. And in case if you are engaged in any business or profession, and if you have charging any GST, the GST turnover and the gross receipts has to be reported separately. So these are the things which are recently put in the income tax returns filing.
So viewers should ensure that all those information which is required for the financial year 18-19 should be properly disclosed. And I think it will be considered invalid return or probably a defective return.
Correct.
In case any misreporting is done, there is also a penalty which we'll discuss in subsequent slides.
Correct. Now the consequences, what are the consequences of misreporting or underreporting? In case if you fail to disclose any of your income or any other aspect which you are expected to file, expected to disclose in the return, but you are not able to report it there, then what are the consequences? So this can be again bifurcated into misreporting and underreporting. In case if it's misreported, 200% of the amount of tax. And in case if it is underreported, 50%.
What is the definition of misreporting or underreporting? I am not able to understand.
So there are certain cases wherein you can. These are the things which are specifically prescribed under Section 270A of the Income Tax Law. So, in case of misinterpretation or misrepresentation or suppression of the facts, there are certain facts which you want the income tax authorities not to be aware of. And the failure to record, for example, in case if you have made any investment in the books of accounts and it is not there in the tax returns, and in case if you claim any expenditure, for example, you have sold the property and you are claiming that I have paid 20 lakh rupees for the brokerage charges, and you don't have any document to substantiate the expenditure, so that will be considered as underreporting and misreporting and false entry in the books of accounts.
We claim of an expenditure not substantiated by any
evidences and all those things. In case if you have any international transactions which you fail to report in the tax returns, so these are the cases which can be considered as
I think
underreporting
in terms of
and one more thing, once again I want to inform our viewers that in case if you have any questions, we will answer those questions at the end of the session.
Answer the questions. You can send an email along with the email ID. We'll personally one-on-one basis we'll address those queries and then reply to your points. So that will be ensured.
And now,
so Sidhu, I did some misreporting or underreporting. So can I revise my return?
Yes, you can revise the returns.
When and how?
You can be return can be revised by the end of the 1 year from the end of the current concerned financial year. For example, financial year 18-19, you can revise the return up to 31st of March 2020.
All right. So that means actually I should file my original return and then revise it before 31st March 2020.
Within 1 year from the end of
so actually, this is the important point. In case there is any mistake which has already happened and you already filed your income tax return, you can revise and there is still timeline till 31st March 2020. But it's better to file earlier in case there is any revision required. There are a lot of changes which have been brought in the recent past. So in case there is any mistake.
Correct. In case if I missed anything,
it's
so still there is a time to revise the return.
So it's better to revise and then comply with the law.
Correct.
So, in terms of documentation, Sidhu, I have to maintain my Form 16, I have to maintain my medical insurance claim, what I have done. There are a lot of deductions which I claim, there are a lot of income which I have to report, and I need to maintain my bank account. So, how many years I should maintain these documents?
See, normally there is a way in which the tax returns filed by the assessees or the filed by the taxpayers will be taken up for scrutiny, for scrutinization by the income tax department.
Okay.
So
What is
maximum
scrutinization?
scrutinization means they will call for the information in case if they require. Now everything is online. There is a paperless return. You will tell that okay, this is a property I have sold it for 60 lakh, and this is the cost of the property 30 lakhs rupees which I bought it in 2010. So there is no corresponding documentation for this. In case if the department needs that okay, this income has been underreported or expenses has been over claimed, and income tax authorities feels that I need to verify the documentation, examine the documentation, then they will issue a notice, and we have to.
So viewers should make a note telling that they cannot destroy the documentation as soon as the income tax.
At least for a period of 6 years, the documentation has to be maintained by you. 6 years from the end of the current relevant financial year.
So they should ensure that 6 years they preserve the documentation.
And in case if you have any transaction pertaining to the foreign assets, international transaction or something like that, the documentation should be preserved for 16 years from the end of the financial year.
Okay, so in that case, in case I'm holding any foreign investments or foreign shares, so I should ensure that for 16 years I preserve those documentation, so I cannot destroy it immediately.
Correct.
After the expiry of 6 years.
So,
Sidhu, I think in terms of tax return, there are a lot of things.
Lot of things are there. Lot of things.
But apart from that, is there any compliance? Because we talk about compliance. What are the compliances?
Till now, whatever we have discussed, it is only purely on the based on tax returns, filing of tax returns, revision, revised return, belated returns, and all those things.
Okay.
In addition to that, there are a whole lot of compliances which the individual taxpayers are expected to do.
Okay.
And there is one more important thing is advance tax. In case if you are a salaried employee, your tax will be deducted monthly by your employer. There is no need of any action from your
every month
end.
there is a tedious cut which is happening. So every month
So
they
that
say
amount-
payslip and they say
Again, you will not pay any tax on that. It is taken care from your salary.
Alright.
So in addition to your salary, if you have any other income, for example, if you have rental income or if you have interest income and all those things, you have to pay the tax in advance. Otherwise, every taxpayer will tell that, okay, I will wait till the end of the financial year, and at one go, I will pay the entire amount of
That
tax.
means all associates should be paying advance tax.
Yes, wherever your tax, for example, in case if your advance tax liability exceeds rupees 10,000 rupees, you are supposed to mandatorily pay the
So in
taxes.
this case, my income tax liability is less than 10,000. I need not pay.
You need not pay.
All right.
So there are 4 installments in which the advance tax has to be paid on quarterly basis: 15th of June, 15th of September, 15th of December, and entire thing by 15th of the March.
All right. All right. I think the due dates actually for payment of advance tax is also being given here. The viewer can make a note telling that 15th June is actually one of the due date, and 15th September is the other due date. The third installment falls on 15th of December,
Correct.
and the last installment falls on 15th of March.
Correct.
And
And
what if I fail to?
in case if you fail to pay the taxes in advance, then there will be interest under 234C and 234B
Okay.
separately, 1% each
So I think
per month.
this slide, I think we give an example as to, in case there is interest for deferment of advance tax.
deferment of advance tax quarterly shorted. In case if there is any short payment of advance tax, there will be 1% interest,
Okay.
and separate interest will be there under 234B from the April of the concerned assessment year.
Okay.
Fine.
So I think this point, I think says that in case I fail to pay advance tax on timely basis, I'll end up paying interest for delaying payment of taxes. Okay. So is there any other implication or any other thing which I should make a note of as an individual? Do I need to see there is any other compliance which I need to take care of apart from advance tax?
There are some of the compliances which the individuals has to take care, particularly for example, there is in case if you are purchasing any property,
Okay.
and making the payment of more than 50 lakh rupees. In case if you are purchasing a property, the value of which is more than 50 lakhs. Property here means land, building, or consisting of both land and building, excluding agricultural land. In case if you are purchasing the property, the value of which is more than 50 lakhs, you have to deduct 1% tax and pay net amount of 44 net amount to the seller.
Fine, Sudhir. So in case I buy a new property, so I should ensure that there is withholding of taxes.
There is a withholding of tax of 1% of the consideration.
Okay. So in this case, actually,
And this is applicable only for resident. What I am telling, 1% of this sale consideration, it is applicable only for resident.
so in that case, I think when I'm actually buying a property and the value of the property is more than 50 lakhs, so I should deduct 1% TDS.
1% TDS in case if you are making the payment to a resident. And in case if you are making any payment to a non-resident, that is in case if you are purchasing a property from a non-resident. So this threshold limit of 50 lakhs will not be applicable in that. Any amount, it may be less than 50 lakhs, you have to deduct the tax, and the rate of tax there is not 1% Sridhar. There the rate of tax is not 1%. Essentially, that will be 20% of entire sale consideration. And there are other formalities which have to be followed in case if you want to make the payment to a non-resident for the purchase of the property. There are a whole lot of things. There is something called as Form 15CA, which has to be filled on your income tax portal, filed on your income tax portal, and you have to obtain Form 15CB from a chartered accountant, and it has to be submitted to the banker for transferring the funds from your account to the account of the non-resident.
Okay.
So these things you have to take care whenever you are purchasing a property. You need to understand whether, first and foremost thing is you need to understand whether the seller is a resident or non-resident for tax purposes in India. In case if he is a resident, the value of the property is more than 50 lakhs, then you have to deduct the tax at rate of 1%. In case if he is a non-resident, then this 50 lakhs is not applicable, and your tax rate will be much higher rate, and there are other formalities which have to be followed.
So I should ensure that when I'm buying a property from a non-resident, so it's better I consult my chartered accountant.
That in that case, I suggest you have to go for the external consultation.
So it is suggested for the viewers to ensure that in case you have selling a property to a non-resident.
Correct.
Right?
And this is something new. This is what we are seeing on the screen right now is something new. This has been introduced in the Finance Act 2019 recently, and this is applicable for the current financial year 1920. For example, in case if you are constructing the property, you are building your own property for your personal purposes. It may be a residential house property which is intending to occupy for residential purposes. So in case if you are making any payment to a contractor,
alright. So this is actually in terms of constructing any property?
Constructing property or professional charges, contractual payments. In case if you're making the payment of rupees more than 50 lakhs, you have to deduct the tax at rate of 5% and balance amount you have to pay to them. This is a very important amendment which has came from this because whole lot of people, they were engaged in construction activities and the people were paying them a huge amount of money. It may be by way of a bank or it may be by way of a cash, but these people were not disclosing that amount for income tax purposes. Now, to have some control over this kind of transaction, this section has been, section 194M has been introduced recently in the income tax law.
So this is actually in terms of a company, I think there is a section 194C which was covering earlier.
That is for company. This is for individual assessees who are transacting for their personal purposes.
So in case I am an individual, I am supposed to ensure that I deduct TDS in case I make payment more than 50 lakhs?
Yes.
Okay. So this is an important point to make a note by the viewers. Telling that even if I'm not a company, even if I'm not subjected to any tax audit, I'm supposed to ensure that there's a TDS deduction which has been done.
So there is one more important thing, 194 IB, in case if you are making the payment of rent as a salaried employee to someone, and the amount of rent is more than 50,000 per month, you have to deduct the tax at rate of 5% and pay the net amount to the landlord. However, this month on month, you need not do the deduction of this 5%. Once at the end of the financial year, in the month of March, we have to do the deduction of this 5% and
so in case,
you have to pay the taxes.
So in case actually there is any TDS rent paid by me.
Correct.
So I should ensure I deduct TDS.
In case if the amount of rent is more than 50,000 rupees per month.
So I think we are running short of time, but we'll ensure that all the questions, whatever we have enlisted for the PPT, we'll cover it up.
Obviously.
This is one of the important aspects which we discussed in our PPT. Have I paid more tax than what is required? This is one important, I think, question which an individual asks himself, telling that did I pay more tax than what is required? So what are the circumstances which I pay more taxes than what is required?
There may be certain instances wherein you may have paid. For example, there are specific deductions which are allowed in the law. For example, the deduction on account of insurance premium, medical insurance, and in case if you have a charity donations, these things allows you to claim the deduction. But while filing the tax returns, you may forget to claim these returns, claim these deductions. And for a particular financial year, say for example 17-18 financial year, you have sold the shares and there is a loss which you have incurred. And during 18-19 you have entered into another sale transaction and there is a income from that transaction, and brought forward loss is there. That loss is allowed to be set off in accordance with the provisions of section 71, 72 of the income tax law, 70 and 71 of the income tax law. If there may be a fair chance or possibility that you missed out in claiming those brought forward losses, so you end up in paying one more round of tax. So it is advised for you to have a separate file for your deductions to be claimed, or maybe your tuition fees for the children and all those things. And
So
based on that,
so that means if you go to the previous slide again, so there are certain circumstances where I can miss out some of the deduction which I'm entitled to.
correct.
Okay, which are not claimed. I think I should ensure that I keep a separate file for it. And in case I have missed out for filing this return for the financial year 18-19, I can revise my return and then
You can revise the return and you can claim those deductions.
Absolutely. I think this is an important point actually, in case you have failed to claim any of the deductions, or the one important point which Sidhu brought out, in case there is a loss in the previous financial year which is carried forward for the current financial year and I failed to claim that or set off that losses, I can ensure that the losses can be set off against a gain for the current financial year.
Correct.
And then ensure that I pay the right taxes.
In some of the cases, it may happen that your advance tax is obviously based on the estimation. On
Absolutely.
estimation, you have paid more amount of advance tax, so
Right.
than what is required to be paid. So in that case, the taxes paid is more. Your tax liability is actually less. In that case, also you end up in paying the more taxes. There need not be any panic or something to worry that I have paid more amount of taxes.
I pay more taxes.
You have to file the tax returns and claim the refund of the excess tax what you have paid. And now recent times.
So will I
tax
get the
returns-
refund?
Yes,
Will I
yes.
get the
Obviously,
refund?
in case if you are entitled to the refund, obviously you have to get the refund. And
Okay.
refund has been processed very sooner now, and people are getting the refunds within 15 days from the date of filing the tax returns.
Okay. But will I get refund just like that, or do we need to do something?
You have to give your bank account details and all those things. And one more important thing which recently came yesterday, I think this has came. And in case if you are claiming any tax return, you have to log into your income tax portal and you have to go to the profile settings and you have to pre-validate your bank account. You need to ensure that your bank account is linked to your PAN.
So
So there is an option given for pre-validation in the profile settings of your income tax returns, wherein you have to go there and pre-validate your bank account. And the moment you do the pre-validation, you will get an email to your registered email ID telling that your validation is done. In case if for some reasons if the validation does not happen, you will get an email telling that because of these reasons your validation could not happen.
So I think viewers will really appreciate this fact that telling that we have actually brought into the notice to the viewer what was come yesterday. So you have to pre-validate your bank account before you claim a refund, or when you claim a refund, you ensure that you pre-validate your bank account details in the income tax e-filing portal by logging in and telling that this is my bank details. And in case you would require any help from you approach your chartered accountant, definitely they'll be able to help you out in claiming that. So what else we have to do? So in case how do I track the TDS which has been done or advance tax which I paid? So how do I track all those things?
There is a
in one
statement.
place?
Yeah, obviously there is a statement which is called as Form 26AS, and this is fairly available on your income tax web portal. You go there and download this Form 26AS, and it will give you all the events wherever or all the parties who have deducted the taxes on your behalf.
So let me just show it to the viewer as to how do I go about to this tab. So this is how the steps are to be followed. You have to log into your income tax.
Go to your account and you can click on 26AS and download the returns. So we are running out of time. I think just we have to run through some of these. And how do we, in case if I have carried forward loss, for example, in case some of the cases it may happen that the taxes is deducted for this year, but you have not offered that income during this financial year and you want to carry forward the TDS to the next financial year, that option is available in the income tax returns. You can carry forward your TDS to the next financial year and set it off against the subsequent year's tax liability.
So I think one of the important aspects which we have actually been telling people, should I panic in case I have missed?
There is no need to panic as such, Sridhar. There is no need to panic as such.
Okay.
In case if you have missed out anything, you have the option to revise your tax returns within the period of time which is allowed in the law, and you can very well revise the tax returns and correct the whatever you have missed it earlier. And even in case if the time limit for revision of the returns has expired and there is some amount of tax liability, you can still pay the taxes and keep the challan with you.
All right. So that means actually, in case I miss to disclose any income, I can still.
You can at any point of time whenever you get notice to those things, whenever you come to know that I have missed out something, and there is additional amount of tax liability on that, you can very well pay the taxes and keep the challan. In case if the time permits, you can file the tax return, revised tax
So they need
return.
not panic in case there is.
There is no need to panic as
There is no
such.
need to panic because in case there is any error or there is any mistake, there is an option for the viewers actually for the SSC to revise their tax return and then ensure that they are compliant with the law.
Yes.
In case there is a failure even after the due date, filing the revised return as well, they can actually very well pay the taxes and ensure that they keep the tax challans with them and meet the jurisdiction officer
Correct.
and intimate them on this matter. So any other aspects, Sidhu, which we have missed to cover?
I think we have covered most of the things what we were intended to discuss with our viewers.
Okay.
Now, in case if our viewers have any questions, specific questions to ask, they can leave their questions with us along with their email IDs.
Right.
So we will get back to them on those questions within possibly next 1 or 2 days.
I think in case viewers have any questions, you can write to us and you can reach out to us or you can drop in a message.
You can send us a mail. I mean, their email ID, they can give it to us. We will get back to them.
Sure.
You can put on your questions along with your email IDs. We will get back to you certainly within next 1 or 2 days.
Thank you, Sidhu. I think it was a very enlightening session for me as well as for the viewers. Wherein actually a lot of things we could explore. Yes, because we were running short of time, so we had to skip some of the slides. But it was a wonderful session. Thank you very much, Sidhu.
Thank you very much, Sridhar, and thank you for all the viewers.
Thank you.